Warren Buffett, over the weekend, in case you missed it, Berkshire Hathaway reporting a 28% jump in the operating earnings in the fourth quarter, helped by an increase in insurance underwriting earnings and investment income. Berkshire's cash hoard grew to $167.6 billion. It passed a record level from the prior quarter. In his annual letter, Warren Buffett saying there remains only a handful of companies in this country capable of truly moving the needle at Berkshire, and they have been endlessly picked over by us and others. He said there were basically no companies outside of the country that could move the needle. This was the first earnings season report since the death of Charlie Munger, and Buffett devoted much of his annual letter at the beginning of it praising Munger's role in creating the firm, calling him the architect of the company, called himself the general contractor. Buffett said at this year's annual meeting he would take the stage this time with Ajit Jain, who runs their insurance business, and Greg Abel. He also made some interesting comments about the electric business, the regulations around the electric business, and also the train business, and just how capital intensive that business was. You very rarely hear him talk about regulations. I thought, Joe, you'd be interested in knowing that he was calling out some of the regulatory problems that he thought were impacting those businesses, as well as talking about some of the highlights in the business. But it was a fascinating letter, and of course, the first page, which was devoted to Charlie Munger and his relationship, were really quite poignant.
I don't think Charlie liked regulation much, either.
Charlie didn't like regulation much, but it was just interesting to see he's now bought two businesses that are highly regulated businesses.
Yeah.
Most of the other businesses, if you go back and think about them, were not highly regulated businesses.